Chief Executive of Port Shelter Investment Management, joins us from Hong Kong. Thank you very much, Richard, and thank you for your patience as well, for waiting till we gave you a wrap of the political developments. Well, two things. There is a governor who has resigned, and elections in 3 states could go against the ruling party. How would you react as an investor?
Well, I think it's probably still wait and see. I actually rather agreed with your previous speaker, who basically said that, you know, political changes come and go, but what really matters is the economy, and what really matters is earnings and whether those earnings are increasing. I mean, I've generally subscribed to that. There are exceptions, but I generally subscribe to that. Rather more serious is the departure of a central banker. I mean, of course, we've been hearing for a while that relationships aren't quite as smooth as we would like. And I think it's always important to, have smooth relationships between the central bank and the government. I mean, you only have to look at the US at the moment with Trump sounding off against Jay Powell. It doesn't go down well. Investors don't really like that. And I would say if you were looking at a piece of news that was more serious, it's the departure of a central bank governor. The politics will come and go, and we just have to wait and see on that.
What do you expect funds will react? Do you think they could leg it out, or will they wait to see who's the next governor, whether the market, whether the government is indulging in a free-for-all kind of policy? How will funds react, especially debt funds?
Well, I think at the moment, investors are very much in a wait-and-see position anyway. You know, we're on a risk-off scenario at the moment. Yes, the US came and recovered quite well last night. So there are still buyers in the market. And I think most people are generally agreed that certainly the economies or the economics is probably not going to lead us into a downturn, even if the financial markets are a bit wary at the moment. But we may well see slower growth. So we are seeing at the moment a consolidation phase, a risk-off phase. I was rather hoping for a Santa rally. I'm not sure if we're going to see much of that. But I think because we're in that sort of phase, then investors are very much sitting on their hands and probably won't react this side of the new year.
Okay, well, the leads in Madhya Pradesh have narrowed significantly. So BJP is at 94, while the Congress is at 90. And of course, Rajasthan and Chhattisgarh, as we've been telling you, in all likelihood will go to the Congress. So that's where things stand as of now. Richard, hi, good morning. The markets, our own markets have gotten hit quite hard, not just because of the possibility of the BJP seeing a setback, but also the fact that the RBI governor has resigned. Putting all of this together, would you take money out of the Indian markets in the very near term? How do you approach India over the next, say, 3 to 6 months?
I think basically international investors have been looking at the emerging markets as a whole. And yes, you can't look at them as one group. But generally, I think emerging markets have been priced down. You know, they've seen concerns in China. And regardless of the merits of the different markets, they've generally priced them down. You know, India does have the benefit of having reasonable growth. It's a market that moves a lot. It is subject to political moves. It is subject to a lot of decisions happening that sometimes people find unusual and perhaps not economic. But my feeling is that in general, there are quite a few emerging markets, and India among them, where the fundamentals don't actually look too bad. I mean, for instance, compared to China. So I think that international investors will continue to keep an eye on it. But while markets and investors are generally risk off, they're not really going to put their toe in the water. They're going to have to wait first for signs that people want to continue to start buying again.
Okay. By the way, PSU banks really are having a big rally now. Just look at State Bank of India's intraday chart. That's now moved to the high point, and that's really got the Bank Nifty back from the brink, from the low point. That's the SBI and Yes Bank, of course, but SBI more particularly. And keep an eye on Oriental Bank of Commerce, Bank of India, Oriental Bank of Commerce in particular, because that's the one where there was a lot of buying earlier as well.
Doesn't make logical sense to me. How is a pro-Congress trade a pro-PSU trade?
This one is on the RBI governor. This, you know, what trade you're seeing right now.
But SBI is not in the PCA list.
No,
I mean, I'm not able to make sense of the pattern.
SBI is rallying because of the Vijay Mallya extradition news, and SBI has the largest exposure. That apart, I think the one which is really rallying big now is Oriental Bank of Commerce and Bank of India. This is on
those are the two banks
coming
which
out
could
of PCA,
come out of PCA.
Coming out of PCA, and that's the reason you're seeing that part of the market rallying quite a bit. Both OBC and Bank of India, and OBC in particular. But Richard, good morning. You know, the risk for the Indian markets have only gone up now, right? Over the next 6 months, do you think this is time to be slowly building portfolios in the hope that perhaps the market would see something similar to what they did at the at the time of 2009, when we had a lot of uncertainty, but post the election outcome, we had a big rally?
Well, I think everybody wants to buy on dips. And I think from an international investor's point of view, we tend to look at what's happening in the rest of the world. And if we feel more confident, then we start moving in. But, you know, as I've said before, and this isn't work in every occasion, but politics tends to be short-term. Economics is long-term. If you look at what happened with Trump, we had a big phase of uncertainty, and then we have almost a relief rally after that. Not necessarily to do with Trump, but the initial one was a relief rally, and then, of course, other factors came later. So, yes, I feel that if the market has been held back for political issues, then it is likely to see a bit of a rebound. But the key thing is to keep your eyes focused on economics, focused on earnings, focused on corporate performance, rather than worry about whether politicians are going to make a tweak here or there, because most politicians, as we see from Brexit, are quite hands-on.
Okay, well, Richard, we'll leave it at that. Thank you so much for joining us. It's actually not a bad outcome at all. The mid-caps, I think, are turning into the green. Yes, the mid-cap index is in the green at the moment, and the Nifty has recovered quite a bit. 10,335 was the lows of the day. We are back above 10,400, so massive recovery is what you've seen. Turning out to be quite a volatile day, though. We'll take a short break on that note. More market talk lined up ahead. Nilesh Shah, the Managing Director of Kotak Mahindra Asset Management, will be with us.